first of all, the multiplier, right? So if you step into the marketplace and there are no offers for Bitcoin between here and 100,000, say, there's just no offers. There, you look at the book and there's nothing offered there. You could buy $1 of Bitcoin at $100,000 price, and that takes that market cap all the way up to that. Now everybody's made that paper gain because there was just no liquidity, and that's what you're seeing here. You're seeing more buying demand than selling demand. It sounds super simple and stupid, but that's exactly what it is. It's just that there's been pockets of illiquidity. And those pockets are closing on the way up. So even though we've had, call it $10 billion net come in, the GBTC selling has been absorbed by mostly by the other ETFs. And then the additional capital has come in is about $10 trillion ish, it's closer probably to 12 now. But the point is that Bitcoin has risen by hundreds of billions of dollars in market value since the launch of these ETFs. So the multiplier is somewhere north of, I did it a few days ago, is north of 40, 45, I think it was. So, and it'll settle down, as we get higher in price, we get more, it will settle down. And remember, you're just looking at the ETFs there. So the multiplier is probably lower than that, but net, that's what's happening on the multiplier side. Now, the amount of capital that's out there. So if you step back, Brandon, and you look at the investable assets in the world, right? The biggest thing in the world is real estate. So you've got your residential real estate is at $500 trillion. You've got commercial real estate, which is about 115 or 120. You've got bonds, which are about 130 trillion. You've got stocks around the world, which are 110, 115. It's fluctuating. You've got about $90 trillion of just cash and equivalents out there. And then you've got gold, which is about 10 trillion. And then all the way at the bottom there, you've got Bitcoin, which is about 1 trillion. And you could add in things like art and collectibles for another 20 or 30 trillion. But that you're talking about somewhere about 950 trillion to $1 quadrillion of assets out there, investable assets. And Bitcoin is making up it's tiny. It's 0.1% of the total, So now when let's dig in, let's just drill in a little bit deeper, right? So I posted something earlier this week again about Bitcoin had climbed up to the 8th largest asset in the world. It just toppled silver. And you've got things up there like Saudi Aramco, you've got Apple and Microsoft and Google and and Nvidia. Like these are massive assets, but those are in that stock, that's $110 trillion of stock bucket. So, but the point is that we'll start to see reallocation out of things like stocks and gold. We've seen the ETFs have been bleeding in gold. And so that's been interesting. But then also you've got people who buy real estate just for long-term investments. And so that might be a bucket that starts to bleed into here. But the first bucket that's going to bleed in there is from these pension funds, from the institutions, the endowments that are saying, okay, I need to have a 0.5% or 1% allocation to Bitcoin. And now we're seeing BlackRock putting it into their funds. So it's an ETF that's being put into their big ETF fund that has a number of different assets, but they're going to allocate it in there. So now you're going to have people who own the BlackRock asset. That's a BlackRock equity bond fund or whatever. And then that's going to be an allocation in there. So you'll have people don't even realize that they own Bitcoin, but it's part of the allocation of this bigger fund. So when you look at BlackRock with somewhere around $10 trillion of assets, so if they make just 1%, 1% position allocation across the board, that's a massive amount for that one institution. So, and they're just one institution. They're one of, if not the largest, but they're right up there in the top 2 or 3. But this is what you're going to start to see. Lastly, so unpacking this further, which will tie us back to that multiplier effect. When you're an institution, and I've sat in this seat for many years, and you need an allocation of something, you're you're not really price sensitive. You're not looking at it and going, oh well, it's up 3% today. You're not doing that. You're saying, well, I need 1% in my portfolio. So you get the amount you need, the $100 million, and you call up your broker or you talk to your sales trader on the other side, Morgan Stanley or Goldman Sachs. You say, I need to buy $100,000 of Bitcoin today. So go in there and buy, FBTC or IBIT. Just participate. And so they just participate along with the rest of the volume. They may end up driving volume, but it's called volume weighted average price, the VWAP. They just want to participate. And they're not sitting there saying, oh, well, we're going to wait until it comes back to 63,000. They're just like, well, we need to buy it. Buy it. And then when you're done, we're going to have 100 million more. And when you're done with that, we're going to have $100 million more. And then when you're done with that, we're going to have $100 million more. And it's literally, this is just what's happening. And this is going to happen in perpetuity, not in perpetuity, but I can see a foreseeable future, whether it's the next number of weeks, the next number of months, but that's just the function and the way that Wall Street works, the way that institutional investing works. Lastly, this is all holding all else equal. We haven't even talked about interest rates, the Fed, what's going on in the deficits and with the overall markets. Those could have an impact, certainly, to an asset like Bitcoin, as we've seen. So holding everything else equal, we're just in this period of, well, looks like we're going to have this beautiful soft landing. This is what's happening.
What did Michael Saylor see that Warren Buffett doesn't see?
You can't get any more traditional old school than Warren Buffett. I can't criticize Warren Buffett. He's made an absolute fortune in the world that he lives in the world that we've lived in institutionally, institutional investing. So what is he doing? Well, he's being paid more to sit on cash now than he has in 20 years. So why wouldn't he do that? If he thinks that there's risks to market turmoil, which I believe there are risks, absolutely, then why wouldn't he sit on that cash? He's not just sitting on cash that's not earning anything. He's earning somewhere north of 5%, I would imagine, on average on that cash that he's sitting on while he waits for opportunities. If we do have market turmoil, he'll step in and take advantage of it. That's his MO. He's a value investor, deep value. And so he wants cash generating businesses that he can value. He can't value Bitcoin. That's the problem. He looks at it and he says, I don't know how to value that. That's not in my purview. It's not on my fairway that I've made all this money all these years on. Now, I agree. He's completely wrong about Bitcoin. He and Charlie Munger have been wrong all along, but he's been right about other things, to a great degree. So is it disappointing to hear them speak so badly about it? Sure it is, but Charlie's gone. The timeline for Warren Buffett isn't 40 years. The timeline, hopefully for you and me, you longer than me, is that or longer. We don't know, but that's what our hope is. And so we have a long time, and this is a long-term thesis for us. So why is he doing that? He's getting paid. Now, is it melting away? Well, you and I would argue yes. Why?
If you like that clip, then you definitely got to check out this next spicy clip. I think you're really going to like it. Come on, check it out. But if you want the full version, the full interview, check that out over here. Come on, do it. I'll see you in there.